we have with us Mr. Riaz Thingna. He's the partner at Thornton, Bharat as well. He's joining us to help us demystify and decode this entire amendment which has happened, wherein 20% TCS or tax collected at source has been implemented on the credit card transactions which are done for the international travel as well as international expenses at the overall ambit as well. Riaz, hi, thank you so much for making time and speaking with us. First up, help us understand what's the amendment, what are the changes which has been made, and how will it impact our life?
Thank you for having me here. As far as TCS is concerned, it was introduced in the last budget, and at that time it was made clear that all remittances under the LRS scheme would be subject to TCS. Except for education and medical, there would be a general rate of 20% TCS. Now, what has happened now, why this amendment which came on the 16th of May, there's been a clarification there that credit card transactions, which could have been covered under current account transactions, have now been removed from that exemption, and therefore any expenditure on credit cards by an individual would fall under the LRS limit, and therefore there would be a 20% TCS. Now, what it means is that if you were making this expenditure in any case on your LRS expenditure, your personal tours, your expenditure while you're on holiday, your subscriptions to magazines, to your various OTT platforms, etc. All that was anyway subject to TCS, but now even if you are, say, on a business trip, which would normally have fallen under current account transactions, now there will be a TCS. It will be considered as the LRS limit of the individual, unless there's a prior RBI approval. The government, on the other hand, has anyway clarified yesterday that these business transactions are not under LRS and therefore should not be under TCS. So what it means is that now, once you make an expenditure on your individual's credit card, the banks have no way of knowing what it is related to. So it would be considered as an LRS. There would be a TCS. But if you take a separate remittance for your business travel, then it would not be subject to TCS. It would be considered as a current account transaction. That in brief is the change.
Right. So, Riaz, that's the first clarification that you're imparting us, that for now the banks will have no way to differentiate a business travel versus a personal travel. So, until and unless you make that specification and take the approval already, both the expenses, whether business or personal, will be taken at par and 20% TCS will be applicable. My next question to you is, is the different modes of expenditure at this point of time when it comes to international spend was what? Credit card, debit card, Forex card, as well as cash. Are all of these four at par now? Is the TCS limit going to be the same? TCS livability at 20% going to be same across the board?
Yes, as long as the expenditure is falling within the category of LRS, irrespective of how you spend it, or the mode of spending, there will be a 20% TCS. So, for example, if you are applying to your bank for Forex withdrawal under a Forex card, at the time of the withdrawal itself, there will be a 20% levy. If you make any expenditure abroad, there will be a 20% levy as long as your expenditure is on your personal account and therefore under LRS.
I wanted to get to the next point and getting a bit deeper into the nature of expenditure here. Could you help us understand, is it going to be only on bigger expenditure if there is a threshold? Because as a user, when I am making subscriptions of, let's say, a Google or a YouTube or a Netflix, and if they are in dollar terms, will there be a TCS levy on all of those as well?
Yeah, so we used to have a threshold. With the budget, the threshold has been removed. Again, I'm leaving aside education and medical expenses, but otherwise the threshold has been removed. So from the first dollar that you spend, there will be a levy of TCS. So there will be no threshold at all. all your subscriptions, whether it is YouTube or anything else, will be subject to that 20% TCS.
Riaz also wanted a sense from you. If you're purchasing, let's say, a tour package, and I'm purchasing from a domestic aggregator, and I'm paying it in rupee term, there's no involvement of a dollar conversion there. Even then, would this levy be applicable?
There is a dollar conversion if you're talking about a foreign travel. We'll leave aside domestic travel. Whenever you're talking about foreign travel, what would happen is the aggregator collects from you and is going to pay the expenditure in foreign currency. So there would be a foreign currency payment, and therefore it would be under the LRS scheme.
Fair enough. So it is them who are making the conversion in any case. So you still need to pay the 20% TCS, even if you are buying it with a local operator at this point of time. My next question to you is, what's the threshold at this point of time when it comes to the expenditure made on education as well as medical? Because if I have it right, there is a bit of exemption till 7 lakh rupees.
That's right. That's right. So there is a 7 lakh threshold. Only expenditure beyond that will be covered. Now, there, it's a good thing that there was some clarification yesterday. What constitutes education expenses, what constitute medical expenses, some incidental expenses that are incurred along with the primary expense. There, I think they've clarified that they will come out with a clarification, a clarity on exactly what all expenses can also be covered under those heads.
Okay, fair enough. Also, I wanted to understand from you, if somebody is looking at a leeway or doing it in a better way wherein they don't have to pay the 20% TCs, is there any way that you can think of which will be better off versus credit card spend?
No, so as I said, that if it is LRS, there is TCS. There, I don't think there is any choice, because whatever you do, there will be, it will be counted in your 250,000 overall limit, and therefore there would be, and TCS would follow. The only planning one can do is that when one is going in for business expenses, which are not under LRS, which are covered under current account transactions and are permitted, in those cases, at the current state of clarity that we have, it appears that it might be better to apply for a foreign exchange and for business purposes and incur the expenditure out of the foreign exchange that is withdrawn specifically to stay out of the LRS limit. So the individual who's actually, say, traveling on business will not be subject, the expenditure will not be included under his LRS limit. So I guess for such corporate expenses, for expenses which are not otherwise LRS expenses, it might make sense to do it other than a credit card.
Okay, so there is no choice available for now. At least it looks like that there is no amount of planning that can help you to cut down that 20% levy. But Riaz, also a sense this is not an additional expenditure per se. This is a TCS being collected which can be refunded at a later date. Could you explain for our viewers of what would be the way of claiming the refund?
Absolutely. So this is tax collection at source. So when that expenditure, when the collection happens, it goes to the credit of the individual, and therefore it will be taken as tax paid by the individual and will be available for a set off against the tax payable by the individual on his income. So there is no additional outflow. All that happens is there could be a cash flow situation. There is no additional burden.
Okay, so that's the other clarification coming in on how to claim the refund as well. But Riaz, any other internal that we need to watch out for with respect to this amendment coming in? Is there any other exemption? Is there any limit, anything that we need to watch out for further with respect to this amendment coming in? Or is there a way that, is there a possibility this can roll back as well at this point of time? In your discussions with the ministry, with the other industry expert, is there any expectation that there could be a rollback?
It doesn't appear so. It appears that this is a thought out move. The idea is that a lot of people who had been, availing of the LRS remittance scheme were not really taxpayers, so they wouldn't file the tax returns, and that seemed unlikely that somebody who can afford a foreign holiday, say, is not a taxpayer. So this is designed to bring all those people under the tax net, and therefore a 20% appeared to be a fair rate in the revenue, in the view of the revenue authorities, to ensure that there is a tax collected by people who were otherwise staying out of the tax net, though they would otherwise be expected to pay. So I don't expect a rollback of sorts, but yes, one could look out for clarifications on these on the modalities. So when you're talking about, as I said, expenditure that you incur outside of LRS, whether there would be some clarifications on how one can put it under current account transactions without adding it to the LRS limits of the individuals. Those kind of clarifications we can expect.
Riaz, I just wanted to understand from you, what do you think would be the reason or the rationale for the government to put this levy or increase this levy or remove the exemption? Because if it was just to manage the trail, that data was already available since this was being spent on credit card. Why then increase the threshold to 20%? Because I'm sure this is not about tax collection for the government. This will not, really lead to increase in the amount of collections that they do. So what do you think is the reason? Because it's feeling like, especially kind of feedback that we're getting on social media, that it's going to be a lot more troublesome for people.
So I would believe that the purpose is to ensure that people who should be under the tax net are being brought under the tax net. So what was happening is that when TCS was introduced at 5%, 5% was a low limit. And of course, it was also beyond the threshold of 7 lakhs. So therefore, people who did not pay tax, continued to not pay tax. And they took 5% as a additional cost. Now with 20%, there and with no threshold, it would be a reasonable cost of collection. So therefore, I guess that people who were staying out of the tax net will find it necessary to come back into tax net. So I think it is more towards increasing the tax base that the government has always wanted, rather than actual collection of the volume itself.
Riaz, really appreciate you joining us, talking to us about demystifying this entire complicated issue and helping us understand how it will impact our daily lives. Really appreciate you joining us and speaking with ET Now today.
Thank you. Thank you very much.